Hey, Andrew Malcolm here from mortgagehq. So we're going to have a quick chat about whether interest rates are going up or down. First thing I want to say is if you're reading what the bank economists are saying, depending on what bank you are reading from, one will say up, one will say down. Like the bank economists are all with a lot of conviction and confidence saying one thing and the other thing. So it's like, who do you believe? Well, the key thing to remember is all of these economists have made predictions in the past about whether rates are going down or up. And if you go back 2, 3, 4, 5, even 10 years ago, and you read what these economists were saying about interest rates, you will see that more than half the time they have been wrong. And what happens is a lot of these guys will say rates are going up, rates are going up, rates are going up. And then a month or two later, they'll justify why they were wrong and then give you a new prediction. And they'll just keep making really bold predictions, and every so often they'll be right and people will be patting them on the back when they are right. But a lot of the time it's actually just luck or disguised incompetence. So you got to take with it a grain of salt what the bank economists are saying. It's their job to assess the market situation and make predictions based on that analysis, but they will be the first to admit that they are often wrong. So don't trust your neighbor, don't trust your uncle, don't trust your friends and real estate agents and mortgage brokers that make really bold, confident predictions about whether interest rates are going down or up, because even the economists and the bankers that are experts and the ones with all the information about what's going on in the market, their predictions are more often than not wrong. So how can people like you and me, just everyday property investors, be expected to be able to understand what's going on and to be able to predict confidently whether rates are going up or down? If you are confident yourself whether rates are going up or down, you are fooling yourself, because these people with 100, even 1,000 times more information and insight than you and me, they are wrong. So what can you possibly do? You've got mortgages coming up for renewal. You're thinking, I need to get in front of this. Should I fix for a long time because the rates are about to go up and they're super low now? Or should I fix for a short term because I don't want to miss out and rates are going to fall by another percentage and I don't want to miss out on that either? And that's where interest rate averaging comes in. So you want to fix your mortgages over a few different terms, maybe some on 1 year, 2 year, 3 year, based on your independent position and your goals. Fixing for long term might, in theory, make sense. You want to lock in your returns now and limit your risk. The thing that you've got to be careful of, and you can see this on Facebook and a lot of the groups, Property Investors Chat or New Zealand Mortgage Rates, is people have been constantly burned, especially in the last 5 to 10 years, when they fix for long terms, even 3 years, and then rates keep falling and falling and falling. Now, that doesn't really make a big difference in your life. You've locked in certainty at a specific time. Where you really get stuck is when you have things that you didn't predict, like a loss of income or illness, separation, or you want to sell one or some of the properties you've got and you've got unexpected break fees. Now, if you fix for 3 years and 1 year in you want to break your mortgage, if interest rates have dropped a lot, the break fee is going to be absolutely ginormous. So you just got to proceed with caution when you're fixing for 3, 4, 5 years, and fixing for 1 or 2 years based on that is a little bit less risky. Interest rates, based on the last 10 years of history, have been low and falling. Even if they rise a little bit in the next year or two, fixing for a year or so now is probably going to be a little bit less risk on balance, because of those high break fees when your life events are unpredicted and change. So learn about interest rate averaging, talk to your mortgage advisor about what's best based on your goals and your long-term plan, and don't try to time the market when it comes to interest rates. If somebody is telling you really confidently what they think the rates are going to do, up or down, you just got to smile and just accept that they actually, their confidence is unfounded. So if you've got questions about interest rates, whether they're going up or down, leave some comments and hit that subscribe button.